Good evening. You're watching ET Now. This, of course, is our special show where we, of course, get you all what GST really means for you. The show is GST and You, and I'm Rajeev Dimri. Remember, the show is your one-stop shop where we take your queries and tell you how GST will impact your life, your business, and tell you various ways of being GST compliant. And in fact, over the next half an hour, we take queries on filing returns, on the impact of GST on e-commerce companies and also service providers. And of course, many more queries that we will take in the show. And we have our expert lineup also ready. But before we go on that, we will of course, tell you what really happened with respect to this major tax reform legislation today. You have to remember that GST, while the government has reached out to a lot of opposition parties, the Congress party today has decided to skip the GST, but those are of course what's happening on the political end. This show, GST and You, will of course help you understand what is going to be the impact of GST on your lives. Our expert panel now joining in. We have Rajeev Dimri, partner, BMR Associates, and L. Badri Narayan, partner at Lakshmi Kumaran and Sridharan, joining in. Okay, gentlemen, many thanks for joining in. Let's take our first query. We're just one day away from GST and people are still wanting to know, Mr. Dimri, on what is the format for filing returns under GST. While we do know the fact that you have to log into www.gst.gov.in, you have to provide documents like a PAN card or a bank statement, and the government will go ahead and give you a provisional ID to do business from July 1st under GST. But break it down for us, a step-by-step analysis. What should one really brace for? What are the kind of things one should be looking for under the GST regime?
Well, I guess your question is from a business perspective as to what do they need to do. I would imagine that all the large businesses which are already registered under some tax or the other, and in fact in more than one tax in the other, they would have already gone and opted for a transitional registration, and they all should have had their registration formalities done, whatever are possible for now. So all the large businesses in our experience have already followed that process. Where we do see some gaps in the world that is visible to us is the down the line retailers and distributors are the ones where there is some gap in the registration process. And yes, I think it is an online process, and therefore there is under the current system, there is a huge list of documents to be filed, lease agreements to be filed. So it's not that our existing systems are any easier. So from a ease of seeking registration, I haven't come across anybody who had difficulties in doing so. And therefore it is more the hesitation of people to submit themselves to this jurisdiction is what has prevented people from registration. But if somebody is interested, I think the systems are fairly simple for a business perspective who have trained people to be able to get their registration. I have not come across anybody who had difficulty in getting this registration. So they do need to get it done. And once they have their registration, they do need to inform this registration to all their vendors and to all their buyers, because it's the whole ecosystem that need to get together on July 1. So any invoice that will be raised by business effectively from July 1, which ideally may be from Monday as the new business week begins. It's more the exchange of information that needs to happen with your vendors and with your buyers, and I think some of the companies are struggling in that, where they don't have all the databases available and information about the dealer registration or the registration status for their buyers or their suppliers.
But Mr. Dimri, I need to ask you one very simple question. If I am, going to get myself registered on this GST website, if you can help us understand what are the 4 or the 5 key things that one should have?
Well, all the documents that are necessary are documents that a company would ordinarily have, whether we're talking about the PAN, whether we're talking about other documents, addresses, how many places do I have businesses in, do I need to seek registration at multiple state level, so that basic business information is not something that is complicated, is not something that some new unique document is required. So my assumption is based on that we are dealing with businesses who have some experience of dealing with the legacy laws. We're not talking about individuals, we're talking about business entities who have people who can understand these things. So it's not that there is any set of documentation that is required which is ordinarily not available with the company. So it is to do with the legal status of the company, it is to do with their other registrations. So none of those documentation is something that is hard to find for a company.
Right. Mr. Dimri and Mr. Badrinarayan, stay on with us. We also have a first caller who's joining in, Jishu, who's joining us from Chennai. Jishu, welcome to the show. What's your question?
Yeah, we are into manufacturing of tobacco products. So we have NCCD and
all right, and then
NCCD and chess has been levied.
Jishu, what's your question?
NCCD as chess has been levied. I want to know whether it is only at the manufacturing level or also at the subsiding supply chain.
All right, Mr. Badrinarayan, how about you take that question?
So as I understand, thank you very much. As I understand, your query is that I'm a manufacturer of tobacco products and today I'm paying certain cesses and your question is whether these cesses are going to continue in the new GST regime or not. The short answer is these cesses are all getting subsumed in the GST regime, but what you're going to be basically paying would be a tax on GST or on tobacco. You're also going to be paying an excise duty which is going to be applicable at the manufacturing stage, at the tobacco stage. And then of course there is no VAT which is applied, unlike petroleum products which attract both the excise duty as also VAT. And so what you will really be paying would be GST at 28%. Excise duty, whatever is the current regime, is going to continue with respect to you. So whatever is there at the manufacturing level, it will be applicable just like we have today, because excise is a tax on manufacture. And then down the chain, when you are going to resell these goods and your distributor is going to purchase them and then he's going to resell, he'll basically be paying GST plus compensation cess, but he will not be paying any excise duty, and none of those provisions with respect to excise or NCCD will apply in the distribution chain downwards below him. So short question is, it will be applicable only at the manufacturing stage just like it is today. At the distribution stage, you will only be paying GST and compensation cess and going forward from there.
All right. That's an important clarification, but Mr. Badrinarayan, we have another question that's coming in, especially on tobacco. Can a tobacco company apply under the composition levy scheme with less than 75 lakhs turnover? Because yesterday in the new rules that have been notified by the government, they have said that ice cream tobacco makers cannot opt for GST composition scheme. What's your own understanding and what would it mean for a lot of other tobacco companies?
So generally what they are feeling is that the composition scheme should be kept for traders and for people like in the restaurant and for certain small scale industries which were having less than 1.5 lakhs as the base for the purpose of registration. As you know, in excise the threshold for registration is about 1.5 crores, which is what they're bringing down. Earlier it was 50 lakhs, now they've increased it to 75 lakhs. The thought process with respect to tobacco and others, because these are commodities which typically tend to have a high evasion rate. So these are commodities which they want to bring into the net of not having to go through a composition scheme but go through a normal GST scheme so that we can have more control over them. So the inclination seems to be that certain types of manufacturing industries are going to be kept outside GST from a composition scheme perspective and have them comply through the entire scheme so that we have more accountability with respect to how it is there. Some of the things that they have found is that there are companies which are taking multiple composition scheme registrations and trying to avoid that. They feel that this may defeat the whole purpose of GST, where they want to incentivize and encourage people to take registration. And certain areas like tobacco and others, which are likely to be areas which are going to be for the purpose of levy of compensation cess, higher amount of taxes, and then for using these taxes for the purpose of compensating for any losses of tax revenues from other commodities. They are wanting to keep them outside the GST, outside the composition scheme, and collect the entire tax on them. And I think that's the rationale behind the entire scheme, to keep them outside composition scheme.
Absolutely, the government also wants better compliance, and they also want to ensure that for demerit products, they are not able to come under the composition scheme. That, of course, is a valid point that has been raised. But we also have another caller who's joining in, Sonia Bhandari from Pune. Sonia, what's your question?
Hi, I wanted to ask that I was a service tax assessee and I migrated to GST. But since my gross receipts are 12 lakh, I am not supposed to pay GST. But in this transitionary period, till I'm not on the portal, on the GST portal, there is no provision right now to opt out where I can file form GST REG 24. So till that period, am I supposed to charge GST on my invoices? Or am I supposed to not levy any GST because my turnover is below 20 lakh?
All right, Mr. Dimri, Sonia is a service tax assessee. Her turnover currently is around 12 lakhs. She has been able to put herself under the GST and get herself registered. But is she supposed to, charge GST on her invoices? What's your view on that?
No, she's not, because she's clearly below the threshold. So yes, I can understand the situation where in the service tax, under the legacy laws, the threshold is 10 lakhs, whereas under the GST it has been moved to 20. So she's clearly not liable to charge GST if she chooses not to register and stay out of the registration process. So she should not be charging. I'm sure they'll come out with a process where people like her can opt out. Today it must have automatically migrated because that was the scheme that they had, but I'm sure that system will get updated. But from a substantive purposes, she is not liable, she is below the threshold, and therefore she should not be charging.
Okay, so Sonia, you don't have to charge GST on your invoice, and that's of course an important clarification, because at this point of time a lot of traders who are looking to move from the current system to the GST system, their big concern is should they be charging GST on their invoice or not. But if your threshold is less than 20 lakhs, then perhaps you can stay away. But I just Mr. Badrinarayan, help us understand. I just have one small question. Although at this point of time you don't need to, put yourself, charge GST on your invoice, but is it good enough for you to register yourself? Because at a later stage, if your turnover increases, it's always best to be under the GST net.
So here is what I understand. So first and foremost, what many of us have got is a provisional GST ID. And this provisional GST ID has to be taken to completion at the option of the person who is getting registered. So under section 139, which talks about migration of taxpayers, it specifically provides that you can migrate into GST, but if you apply and cancel, the cancellation can be from a retrospective effect date from 1st of July. So whatever queries Sonia has with respect to cancellation, I think she should be fine if she doesn't charge. Having said that, I think it's always good if you're in a business where you're likely to cross 20 lakhs in the near future or in 10 months, because you don't know how GST is going to play out. That is one. And second, my recommendation to Sonia is to continue to remain registered in GST, because whichever clients or whoever she's going to provide services to, if she's an unregistered person, your client has to pay tax on reverse charge basis under section 9(4). Therefore, the client will always prefer to deal with registered GST vendors rather than unregistered GST vendors. So my recommendation to her would be, even though it might be painful to charge GST when you're below the 20 lakh limit, if you're ultimately a service provider providing services from a single location, and if you don't mind doing the extra compliance of filing the returns on a month-on-month basis, you would get great benefits of remaining registered, so that your clients don't get concerned as to what is the type of service you're providing, them having to decide on a reverse charge basis whether to pay tax on your services, and then how to classify and how to take credit. So my sense is that big businesses or even medium businesses are going to move away from people who are going to be unregistered in GST. And the whole purpose being that if you are contributing to the economy in whatever way, goods, services, trading, manufacturing, in whatever form, it's always ideal to take a registration and go forward of it.
Absolutely. If you're contributing to the economy, it's always best practice that you are under the GST net. There's another question coming in from Ajay Kaushik from Bangalore. Ajay, welcome to the show. What's your question?
Yeah, actually, I am a service provider, and my turnover is 5 lakh rupees. But I provide my services out of my home state. So because of that, I have to get the registration done. Now, my question is, even though I have registered, whether I have to collect the tax from my client, because I am well below the threshold limit of 20 lakhs.
Mr. Dimri, Ajay is a service provider, and he provides service out of his home state with a turnover of around 5 lakhs. What should he be doing?
So what he's talking about is that while he's below the threshold, but he's performing interstate service transaction, and that requires a registration. So the threshold only applies on intrastate activity, and therefore if he's required to register, and assuming that he's performing services in a B2B environment, he could charge service tax, and his clients will get the credit for that.
All right, we also have another question coming in from Vijay Rao from Pune. Vijay, welcome to the show. What's your question? Okay, I think we just lost that line. Perils of working in a live news medium. But let me come to you, Mr. Dimri. While you very correctly pointed out as to for a service provider, if you're providing services to vendors and in fact service providers out of the state, then you have to register yourself under the GST. I think we have Vijay on the line. Vijay, what's your question? Welcome to the show. Okay, I think we lost that line again. But, coming back to my question, Mr. Dimri, a lot of queries that we're getting at this point of time has also got to do with the e-commerce space, because there is still not a lot of clarity on how is e-commerce defined under GST. For somebody who is in the e-commerce space, how should they really approach GST?
Well, yes, it is one of the huge debates that is going on is in e-commerce. How do you define, who do you define, and what happens? To simply put, if you're using technology, whether it's a website-based or other forms of technology, to intermediate whether you're actually doing, you could be providing variety of services, but if your business is done through a electronic platform, you become an e-commerce operator, and they seem to have deliberately defined it very broadly, which is meant to cover not what you and I may consider in our mind the traditional players in the e-commerce, the e-retailers or whatever, but it is effectively, the definition has the capability to cover a wide variety of service providers. Basically any electronic platform, technology platform could get covered into it. I'm just giving a generic answer. And it then has issues to do with, for now they have deferred the collection of tax TCS provisions, but at some point in time they will come back and apply. The government has powers to notify certain kind of e-commerce players in certain segments where the primary liability of tax falls on the e-commerce player rather than the underlying service provider. They have already notified 2 such services, whether it is to do with the taxi services or to do with renting out of hotel accommodation, etc. and those have been provided. So yes, there is a huge debate as to who all are electronic commerce operators, because the definition could be anybody using technology would need to look at the definition and see whether they are covered or not. And second, once you get covered into that, it then gets into potential obligations to deduct tax at source, which will get notified later. It has been deferred for now, and you could become the primary person responsible. From a government perspective, it works well because they aggregate the point of tax liability to a large organized player rather than all the unorganized players below that. But for e-commerce players, it effectively becomes just because of your medium of performing service, you become liable to tax. So yes, there are the arguments on both sides. Is it fair? Is it not fair? Who is covered? Who's not covered? We do expect these 17, 18 subcommittees that have been formed in the last few days. They're expected to come out with a guidance paper. There's a specific committee that has been set up on e-commerce itself. We are expecting some more clarity as they come out with a guidance note. But absolutely right that e-commerce is one of the big debates in the GST, particularly for service providers, because the same service, when performed in a traditional brick and mortar environment, would not be subjected to this additional requirement and obligations, but technology space is getting taxed.
In fact, but that's a very valid point, because the government will have to in fact go ahead and define what do they mean by these e-commerce operators, and also I believe not a lot of benefit has been given to the incubators as well. So there's a lot of the industry voices believe that this is something that the government needs to look into, and this doesn't really bode well for the startup world, for the e-commerce world. But Mr. Badri Narayan, let me shift focus, talk about another query that has come in from one of our viewers. This gentleman imports Chinese products and sells it to local merchants, and he wants to know how will his purchases be post GST. Will it be highly priced because of the fact that the government wants to give a boost to local manufacturers, so they've kept the rates in certain brackets at that level. So do you mean for somebody who is importing goods from China stands to lose out in this race post GST?
I'm not sure. I don't know whether it will again depend on the type of commodity. Just to explain how the system works today, whenever I import any goods from China or any other country, I pay something called a basic custom duty, which is not available as credit to anyone, whether you're a manufacturer, service provider or a trader. You also pay something called a CVD, which is a countervailing duty of excise, which is equal to what is the excise rate on similar commodity when manufactured in India. This you look at the central excise tariff for that. And then you also add something called an SAD, which is a special additional duty of customs, which offsets the sales tax incidence on similar goods in India on a holistic basis. So you end up paying a basic custom duty plus a CVD plus an SAD. Now, a trader of these goods used to never get credit of the CVD and the SAD, and therefore used to form part of the cost of the goods when he is going to resell in India. So BCD of course was always a cost, CVD and SAD also used to be a cost. Going forward, import of goods into India is going to be treated as an interstate supply, and therefore on the goods being imported into India, there will be a basic custom duty which will be levied just like any other goods, and then instead of a CVD and an SAD, they are going to charge something called IGST. This IGST is nothing but an integrated GST which is going to be applied, and the good thing about this integrated GST is that this will become available as credit in the hands of the trader for the purpose of resale of the goods. So if he imports something for 100 rupees, and let us say he is paid a basic custom duty of 10 rupees, another IGST of 10 rupees, he is able to take credit of 10 rupees, and if he is going to resell at let us say 150 or 200 rupees, and if his output tax liability is 20 rupees, this 10 rupees is available as set off against his output tax liability. So according to me, on traded items, you are going to see a benefit when it comes to GST. Where the concern for many people is that the rate of IGST is likely to be higher, and therefore ultimately when the goods are going to be sold to the consumer, the price may be higher than what it is today. That again is going to depend on commodity to commodity. It is also going to depend on what our Make in India and other schemes are going to be, where they are going to have lower rates for industrial inputs, they are going to have lower rates for import of goods like parts, spares and so on and so forth, which will be used in India to assemble and resupply the goods vis-a-vis finished products which are going to be attracting a higher rate of tax. So ultimately you will get more credit, but if the rate of tax is going to go up to 28% or 18%, then the overall price may go up. It will depend upon the goods. But according to me, the trading community in general, once GST sets in and gets steady state, is likely to see a reduction in the price in terms of value, but maybe an increase in the actual amount of tax being paid on the goods, and we'll have to see how this is going to offset in the long term with respect to the different imports in GST.
Absolutely, you have to watch out for what products you're getting in, but with that we're completely out of time. Mr. Dimri and Mr. Badri Narayan, many thanks for taking your time out, helping our viewers understand what the change in this tax reform legislation will mean for their businesses, their lives. With that we're completely out of time on this edition of GST and You. Many thanks for watching.